Welcome into another episode of the Smart Mortgage Show, and we talk about different mortgage lending options here with Bill Litton of Cross Country Mortgage. You can go back through some of our past episodes to look at some other ways outside of the traditional mortgage route that many home buyers take that obviously can help you if you don't have a non-traditional work or income or career, whatever that might be. Cross Country Mortgage can help you with that. And today we're talking about the 1099 loan. So Bill, welcome in. As we talk about this 1099 loan, kind of set up the scenario in which this would come into play.
Yeah, so the 1099 income verification option can be really helpful for somebody who's self-employed. Typically, when you're 1099, you're some form of subcontractor, sole proprietor, self-employment. And if your tax strategy has you writing a lot of things off, it can be really hard to qualify for a mortgage. So, typical wisdom in mortgages is to look at the tax returns or W-2s and pay stubs to calculate income. Well, when you're 1099, you won't have a W-2, you won't have standard pay stubs, and the tax returns, based on your tax strategy with your accountant, it might show very little income left over at the end of the day after all expenses. So again, the tax returns are a great tool to look at cash flows, but again, it's a tax document. So how do we, in scenarios where that document does not best portray cash flows and an ability to repay a mortgage, how do we pivot, look at another document like the 1099 and utilize that document to establish the borrower's ability to repay a loan?
Okay, good setup on that. So, if someone is interested in this, Bill, what's different about this process, or what do you need to know kind of going into it if this is something you want to consider?
Well, I think the idea with the 1099 loan is that you've already exhausted the traditional methods, and whoever the mortgage professional is that you're working with, they've either looked at all the other documents, mainly the tax returns, and it does not work looking at standard tax returns. So now we're going into this other type of portfolio product. And this product is probably going to carry a little bit higher interest rate. Now, if the credit's really good and you're putting money down, a decent amount of money down, it won't be much different at all than your standard Fannie Mae, Freddie Mac loan, maybe 0.5%. But as credit scores decrease or loan to values increase, it can definitely vary on interest rate. The disparity between Fannie and Freddie in this product can be a little bit higher. But the important thing to take into consideration is if you're saving a lot on your taxes, so let's just say hypothetically, and this is a common scenario, you're saving roughly $50,000 in taxes and you're paying an extra $5,000 in mortgage interest, you're still saving $45,000, right? So although we want the lowest interest rate, if we had to utilize a 1099 loan, there are still distinct advantages at the end of the day because it lets you lean into the tax strategy that decreases the amount of taxes you're going to pay and qualify for a mortgage.
Yeah, that's good to know. And like Cross Country Mortgage can help you with this process, answer a lot of your questions. You can always get in touch by going to smartmortgageshow.com. That's obviously the easiest way. There's all the contact information down below, but you can also text the word LEND to 21,000 to begin this process as well. And again, we talked about this before, Bill, I think on some of our previous product conversations, but this is something that I might not be aware of at all coming in to talk to you for the first time, right? But hopefully this is something you'll lead me towards, or a good lender will lead you towards, or at least make you aware of as you're kind of going through and figuring out, hey, what's the best option for me?
Yeah, our process essentially has a flow chart, and we always start with the options that are most traditional, the options that are going to offer the best rates and terms. And then from there, we'll get a little more creative and we will, put these products to use, kind of run the customer through a litmus test of, okay, maybe this will work, maybe this won't work, start diving into the guidelines. And the beauty of the 1099 is we're going to use the number. If the 1099 shows that the self-employed customer of ours is going to, brought in last year $200,000, but the tax return shows that they wrote off 150, tax return method's going to let you use 50,000. The 1099 method is going to apply an expense ratio. So 200,000 common expense ratio is 10% expenses. So now instead of using 50,000 per the standard way to do it with Fannie Mae, you're going to use 180,000 in income. Dramatic difference. It's going to allow you to qualify for a lot more. Then we're going to go into the discussion of, okay, even though you qualify for a lot more and you could qualify for a payment of say $5,000 a month, does that fit into your budget? Because just because this loan allows you to do it does not mean you should do it. So then we're going to get into budgeting and, okay, should we take advantage of the full qualification amount or should we dial that back based on your finances and what you're comfortable with?
Yeah, I think that's what's great about working with a good lending team, right? And we kind of stress that quite a bit here, making sure you're working with the right group of people. And Cross Country Mortgage obviously has that flow chart. We'll walk you through that to make sure, look, not only that you're able to get the loan that you want, but also that, hey, you're making sure this fits within your overall goals, all the financial goals you have, that full picture, making sure you're taking all that into account. And that's so important. Bill, does it matter what type of property is for this loan? Does there something that gets ruled out in this, or is this pretty flexible?
So I would say the property type for this product is pretty standard, meaning that, whether it's a single family detached home, a townhome, or a condo, it's going to be available for all of those property types. It will also be available for a 1, 2, 3, or 4 unit product, okay, or property, I should say. So it's going to have most of the property types available. You can also use it for primary residence, second home, or investment property. So it does have a lot of latitude as to what type of property you can lend on.
All right, good stuff. Well, if you have questions for us, we would always encourage you to reach out. Leave a comment down below the video if you're watching us on YouTube. If you want to leave it there, and we'll try to check those out. But also, you can just text the word LEND to 21,000 to begin that process with Bill and the team there at Cross Country Mortgage. But another option for you, and again, that's the whole goal, is to make you aware and informed on these different options that are out there, because there might be one that's available to you that might give you more flexibility and more opportunity than you actually realize, and that's what Cross Country Mortgage can help you with. So hopefully this is of interest to you. If it is, please subscribe to the channel, and we appreciate that support. Bill, as always, appreciate the insight.
Absolutely. Thanks so much. And as always, any questions, reach out. We're always happy to discuss in more detail.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.